So here we have the 1 hour chart. Now, I want you to think about how I taught in the past market structure, and I taught how I use long term highs, intermediate term highs, short term highs. I learned that concept from Larry Williams, okay, and it served me well since 1995, and I believe it's still applicable today. For instance, we have this high right here. This high is a long term high on this 1 hour chart. Why? Because to the left of this swing high, we have a swing high that's lower than it. And to the right of it, we have this swing high that's lower than it. But then we have a high to the left of this one that's higher than that one. This is an intermediate term. This is an intermediate term high. Long term high, intermediate term high, intermediate term high. And everything on the downside with all swing lows is basically the same thing. But we're also noticing that when we're looking at long-term highs and intermediate term highs, when you have these large imbalances inside them, and I taught this in lectures before, people that have been listening to me that are strong students, veteran students, they know that I said this. Intermediate term and long-term highs that have imbalances in them are going to be high probability setups because this inefficiency is going to be much more meaningful than something that may form in a short-term high like this or a short-term high like that, even in here. So this long protracted buy-side imbalance, sell-side inefficiency, that's what I used as my framework on Friday. I extended this buy-side imbalance, sell-side buy-side imbalance, sell-side inefficiency, or BISI for short. You extend that forward. Okay. This is why I'm not supply and demand. Supply and demand is infancy. It's it's lacking a lot. It's a wonderful, wonderful beginning stepping stone, better than classic support and resistance for someone that's brand new and they're just looking for something to study and it's not my work. But if you really want to understand the marketplace, you're going to have to look at inefficiencies, order blocks, and PD arrays the way I teach it, and you need to cast them forward as far as 60 days in advance or 60 days in the past. Look back. And that frame of 120 days, the market's always dynamically referring to all of that. It's a constant continuum of referring back to those same data points. And those data points are my PD arrays, premium and discount arrays. So by extending this in the future, going through all this, we see on Friday morning, it pumped up above Wednesday's high right here, trades above it, and goes to the upper quadrant and pierces it of this buy side imbalance, sell side inefficiency. These lines here, that's the upper quadrant, consequent encroachment, lower quadrant. And the low, I didn't want to put on it because I wanted you to see where that wick high is and that wick low. That's why it's no line on there. Okay, I'm just showing you the quadrant and the consequent encroachment level. So take a note of these right here, these levels, what they are. And when we drop down, you'll know what that stuff is when we drop into a lower time frame chart. So here's the business. Here's February 24th's daily SIBI high. That's that purple or blue line here. And there's a high level line that's just above that, right in here. And the combination of the upper quadrant of this buy side imbalance, sell side efficiency on the hourly chart, that's what that red line is. You can barely see it, but it's there. And then here's the consequent correction of this buy side imbalance, sell side efficiency from the hourly chart. And here is the lower quadrant level. And there's no low or high level. Remember, because I didn't want that to show up in the hourly chart in this presentation. So it's this low of the rectangle here, and the high of that rectangle is the high and low of that 1 hour SIBI. I'm sorry, BISI. So we have a confluence of the upper quadrant of that 1 hour buy side imbalance, sell side efficiency. It is the February 24th of 2025's daily high of its SIBI, which is the same SIBI we've been talking about for months. You see how this is a key level? See how awesome it is to know that these things repeat over and over again. Contrast that with classic support and resistance. How do you know the level that you are looking at or want to see it react to? How do you know it's going to have a reaction there? You don't know that, but I know. I know that these levels are going to repeat. They're going to be extremely sensitive, especially at key times of the day. So, what do we have here? The market used that portion of price action. I told you where the bulk of the volume would be coming in for movement higher or movement lower. The best setups that I teach for the classic market maker buy model, market maker sell model setups, reaccumulation, accumulation, reaccumulation, smart money reversal. I was shorting at the very high candles using the logic that I teach with PD arrays. That's not found in Wyckoff. It's not found in any other, there's no other school of thought that teaches what I'm doing here. Nothing. I don't care what you hear people talk about and they put this crap out there on the internet. It is garbage. All that stuff is garbage. I literally am roasting them every single week, proving that this stuff doesn't exist anywhere else. So by seeing this candlestick here, after it pierces above that, I know if I'm expecting it to drop down, because all this was a Judas swing. It's rallying up there, building in a premium. And I even tweeted or posted on X and said, built in a premium ahead of a wartime weekend. What could go wrong? That was my little hint to you because if you watched the video at 4:50 a.m. that same morning on Friday, you already knew that I was bearish. You already knew that I told you it was going to overlap the new week opening gap down here again. That up close candle there is going to be a inversion fair value gap. Why? Because it's going to go up here and drop. Look at the bodies respecting it there. See that? I know that if that happens and we rally up, it's eventually going to sail through it. If it trades back up to it again, that could be an area where I could add to the position. But this also is another inversion fair value gap. But it's the first presented fair value gap inside of 9:31 to 10 a.m. So extend that forward. Why is it going to be inversion? Because it's bearish. It's going up here to go lower. It consolidates in here. The bodies are respecting what? The lower half. That's exactly how I teach my PD arrays. If you're bearish, you want to see them respecting the lower half only with the bodies and no trespass in the upper half of it when it's bearish and no trespass with the bodies to the lower half of it when it's bullish. It's very, very simple. That's not hard. That's not complicated. It trades up to the high, sells off. Consequent encroachment, consolidates, breaks lower, boom, gap closure. Draw to this minor sell side liquidity. And then we have the February 24th of 2025 daily SIBI low. And it draws down from there all the way into that level and then keys off of that back up into that section of price action, which is basically Wednesday's closing price.